Should you buy NVIDIA right now? We ran it through an AI investment committee, 7 analysts, 1 verdict. And the answer might surprise you. Quick heads up first. This is AI-generated research for education, not financial advice. Do your own homework. Now, let's meet the committee. 7 specialists, technicals, sentiment, news, fundamentals, then a bull versus bear referee, a trader, and a portfolio manager who makes the final call. Here's what each one found. First, the chart. In May, NVDA ripped almost 19% to a peak of $235, then gave back 10%, closing the month around $211. A big rally, then a pullback. The long-term trend is still healthy. Price sits above both the 50-day and 200-day moving averages at $199 and $187, and both are rising. Structurally, this is still an uptrend. But short-term momentum cooled. Price slipped below its 10-day average and the MACD rolled over. So the technical read is genuinely split. Bullish trend, bearish momentum. Next, sentiment. What the crowd is feeling. Overall read, bullish, with caveats. Retail traders on StockTwits were strongly bullish, about 85% positive. News coverage was more mixed. One analyst slapped a $400 price target on it, while others warned of froth and profit-taking. The big shared catalyst everyone's watching, Computex June 2nd, where NVIDIA is expected to reveal its N1X chip. That's days away. On the news front, the demand story keeps validating. Dell alone pointed to roughly $60 billion in AI server revenue. Real orders, not hype. And the long-term vision is enormous. Jensen Huang is now framing humanoid robots as a $40 trillion market. Whether or not you believe the number, it's the narrative driving the stock. Now the numbers that actually matter, fundamentals. And this is where NVIDIA flexes. Revenue grew 85% year over year. Earnings per share grew 214%. Gross margin, 75%. These are not normal numbers for a company this size. It's a cash machine. Nearly $49 billion of free cash flow in a single quarter, over $80 billion in cash and investments, and barely any debt. A fortress balance sheet. Return on equity? 114%. The financial health scorecard is almost a clean sweep, excellent or exceptional across the board. Here's the kicker on valuation. The trailing PE looks high at 32, but the forward PE is under 17. And the PEG ratio is 0.66. Translation. For this growth rate, it's arguably not even expensive. So is there a bear case? Yes, and it's a fair one. The bear says margins will compress as competition heats up. AMD, Intel, and custom silicon are coming. Hyperscaler spending is near a peak, and the stock isn't cheap if growth slows. The bull says, even on conservative assumptions, growth slowing to 40%, the earnings still support the price, with a PEG under 1 and customer orders already locked in. The referee's ruling? The bull wins, but the bear's timing concerns are legitimate, which sets up the actual game plan. So here's the final decision. Rating. Overweight. The committee wants to own NVIDIA. Target weight 4 to 5% of the portfolio. And this is the part that separates a pro from a gambler. They don't buy it all at once. It's a 2-phase plan. Phase 1. Buy a small starter now, about 1 to 1.5%, around $211, with a tight stop near $207, just to get exposure before Computex. Phase 2. Add the rest, 2.5 to 3%, after the Computex announcement once you can see how the catalyst actually lands. Buy the clarity, not the hype. Why split it? Because valuation is stretched, and a major catalyst is days away. Phasing in means you don't miss the move, but you're not betting the farm before the news. And always set the stop. The committee's hard line is the 200-day average near $190. If the thesis breaks, you protect the capital. Quick recap. Fundamentals, exceptional. Technicals, mixed short-term wobble. Sentiment, bullish. Catalyst, Computex, June 2nd. Bottom line, The AI committee says overweight NVIDIA. Buy it, but buy it in 2 disciplined steps with a stop. Conviction with a seatbelt on. One more time. This is AI-generated research, not financial advice. Markets carry risk. Set your own stops and do your own research. If you want more AI committee breakdowns like this one, subscribe and tell me which ticker to run next. See you in the next one.